Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, I'm going to give you 3 of the best growth stocks that you can buy right now. You can use these as a swing trade or even a long-term position trade. So let's jump right in. Alright guys, before we get started today, subscribe to the channel for me, hit that little bell so you get notified every time I post. There's also a link down in the description to my Patreon account. Come over and join the family. We've got an awesome community. You'll get access to the private Discord where we talk stocks. You'll get links to 5 portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock up to the second I do it, I send out a notification so you can follow along. I also send out a lot of swing trade setups, just like the ones we're going to be going over today, as well as anytime I map a chart or I've got a watch list or any type of education. Really just anything that can help us become better investors and take our trading to the next level. So if that's something you're interested in, come over and join us. I think you'll get a ton of value out of it. Day One Squad, I love you guys so much. Thank you for your support. It means the world to me. But guys, let's get started. In today's video, I wanted to just kind of jump on and go over 3 stocks that's got some awesome looking charts. I see a lot of upside in these 3 stocks, especially with kind of the market sentiment starting to kind of change, and you're starting to see a lot more money and a lot more, momentum flowing back into a lot of these growth stocks that were just getting pulverized for months on months on months. Really kind of starting with that big correction, in February and March. So now that the momentum's starting to shift, now that you're seeing a lot of these assets, kind of find their bottoms, these are 3 that I think we can, get in with limited downside and have really nice swing trade setups for, some nice gains over the course of the next few weeks and even months. There's also some of these stocks that they can also be great for just long-term holds, if you can build the conviction in them. I personally own 2 of the 3, and I'm looking to take a position in the 3rd. So let's get started, guys. First one we're going to take a look at today is Sofi. So guys, for those of you guys that are new here, Sofi is definitely one of my favorite stocks. It's probably one of my biggest positions. For those of you guys that do not know, this is a fintech company. I bet most of you do, but I will post a video right here where I go much further in depth on the overall company. The reason why I like Sofi at this particular place is because they've got earnings coming up here in the next few days, on Wednesday actually. And I think that they're actually set up to do much better than their guidance and actually beat earnings. This is a very crucial time for Sofi in the next couple of months, because this year, 2021, is really where they got to show that acceleration on their growth numbers and kind of prove to investors that those first couple of earnings reports weren't just kind of a fluke. That this is how they're growing. They can get those members in the door. They can get multi product members. Because that rate has been growing substantially, and that's really the key for Sofi, is getting multi-product members, because it increases their average revenue per user tremendously. So they're getting more money per customer, and their customer acquisition cost is really good. They're also getting to the point now where they just kind of got to positive EBITDA, and they're projecting to be positive net income by 2023. So if they can do that, this stock will do very well. There's a lot of things that have to go right, but if they can execute like I think they can, this stock could be multiples of where it is today, within the next coming 2 years. So the reason why, again, I put this one on the list is because they have earnings. I think we could get that preemptory run. It's at a lower risk area, and even if you just bought it as a short-term in and out, I think there's a little bit more reward than risk in this situation if the earnings report turns good, and I think that there is quite a bit of upside within the short term as well as the long term. For me, I hold this as a long-term stock. I think there is just so much opportunity here, and they're going to dominate the industry while also disrupting a very traditional industry, the banking industry, that has not been disrupted for the most part. So as we can take a look here, guys, this asset has been range bound for quite some time. I mean, once it fell back inside this range back in early February, has not been able to come out. Now, the range is pretty big. I mean, it's a big trading range from like $14.75 all the way up to pretty much $25. We did try to, run from the bottom and try to break it back here in May, May 12th. And again, guys, we are back at those levels. Now, obviously, this isn't the most low risk level you can get in at because you're at 1691 closed today, but it looks like in post market you're down to 1689. But the lowest risk level would be that 1475. But however, you are getting that rounding bottom. You did have hidden bullish divergence on both your oscillators, which is impending price action continuation to the upside. And so I think that you've got a lot of good here. You're also getting that positive momentum starting to build in that MACD, where you really, before the end of July, you didn't have positive momentum in the stock since clear back in the beginning of June. So now that you're getting that positive momentum, you could see a lot more acceleration. I really like how you're starting to, move to the upside. You got this big bullish engulfing candle. Everything's starting to kind of come together. And if we can get a little bit of, volume and a little bit of bids before earnings, they come out with a really nice earnings report, you could see the stock, start to really trade up. Same thing with the RSI. You're getting that, breakout through that 50% level. You could get a little bit of a snap back to test that 50% mark, but you're getting up towards that bullish control zone that you really want to see the RSI in. The one thing that I'm not a huge fan with the RSI is like the overbought or the oversold. Some people will see it up there over in the overbought and they're like, oh, it's going to go down. That's not the way it works, guys. I mean, when you see some of these stocks, they get up over that overbought and they will stay in that overbought for weeks and months, just continuously moving higher, back, having a little bit of a pullback, getting down towards, that 65 level and then getting right back up above it. So don't use the RSI as a, oversold or overbought in that sense. Use it more for divergence at those oversold and overbought levels. That's really what I use it for, is like, okay, do we have a bad action mad move on a deep level of the RSI giving us, critical divergence, at an inflection point? That's what you want to look for. The way that SoFi is set up right now, guys, is you could be stuck in this range for a while. And the hard part about buying it down here is like you could do what you did back here, where you buy it, but it doesn't quite get to the, through the middle of the range to get back up to the top, and you kind of just trade around the bottom for a while. Now, however, you didn't quite get to the bottom right over here. You kind of just had that big wick down. And I do see that, the market's starting to change, right? We aren't in that, such bearish territory where we were just getting massive corrections. And SoFi was actually showing a lot of strength back here in March and April and not getting pushed down past its, its pre-March lows is, what I call it, because back in March, any stock that got pushed past their mid-March lows, they got crushed, and they haven't made it back. So really nice to see. You also got this, rounding top. You have a big pullback from here. So obviously these are your high risk levels. What you want to see, guys, you want to see it come to the top, even create that partial decline where you get that, halfway, you get that close to come back and test, you break it, spring, back test the spring before advancing. Guys, I think once you break 25, you're going to blow right past 28 because you just don't have any, definite hardcore, resistance level up there. So your goal is 25. You got to break that. And I think with a good earnings report, you could potentially do that. Again, I am holding it for the long term. My price target on this for the end of 2022 is around 40 to 45 bucks. That's what I think it can do. So put this one on your list if you don't already own it. I see a lot of upside in it. Moving on. Next one we're going to take a look at, guys, is MP Materials. This is a really cool stock. I've owned this. This is a stock that I dollar cost average into every Tuesday. And I really like what it's doing right now. Guys, this is a newer stock. If you look, it was SPAC back here in June of 2020. Now, you had some massive moves from October all the way up to March of this year, but that was really kind of when all of the SPACs were just running like crazy. The one thing that I really liked about MP Materials is, yes, if you bought in towards the $40, $50 range, you weren't very happy, come the end of March, because it got slammed all the way down to that low point of like $24, which was an incredible buying opportunity. But guys, look at this, just this big momentum shifting structure. Call it an inverse head and shoulders, call it an ascending triangle, call it whatever you want. But it's it is a momentum shifting structure. You have these higher lows, higher highs, and then you find that bottom and you get that first low, which was the first time that it had, tested the 200-day moving average, because you just didn't have the data before that. So you test that 200-day moving average, you get that momentum shift, you make a higher low, you make a higher high, you make a higher low, you make a higher high, you make a higher low. Now you're running back up to retest the top of the structure. Again, call it whatever you want, the neckline, the ascending triangle, whatever. However, your measured move is from the top of the structure to the bottom of the structure, which would put you up there around $56.41. Guys, you're also on top of all three of your major moving averages. I don't really use the 20 moving average, but the 50 and the 200. You're above that, healthily above it, the 200-day moving average. Really, like I said, you could have the inverse head and shoulders. It doesn't matter. Awesome looking structure. You're getting a lot of accumulation right here. You're getting, nice steady volume. You're getting higher lows. This is the areas that, those people that essentially, bought the stock back in here are still holding the stock. You have more market participants that own the stock today, and certainly back here in May than you did back here at the the end of the year, or May and June of 2020. So really nice looking asset, guys. I mean, you're right there. You are getting ready to break out. I mean, you could even technically, say that 37, 32 range or level was your neckline. It doesn't matter. Again, you're breaking out. What I would like to see is again spring back test and then run up to your next level, guys. Once you break that level, you're going to 51. I mean, there's really no levels of resistance in between that. That's your major area. Again, moving averages, you had hidden bullish divergence on the last low, which is what you always want to see, guys. Anytime you're getting like an inverse head and shoulders or a 3 rising valleys or whatever you want to call it, because you could technically even be getting a 3 rising valleys here. On that last low, you always want to see hidden bullish divergence, and you could technically even see, class A bullish divergence on the first low, or maybe the second low, but you always want to see, hidden bullish divergence going into that last low, because it's, again, impending price action continuation. It's just showing that, the seller exhaustion is essentially what it's showing. So, you get that momentum shift, you make your first high, your first low, your second low, and then, right going into your last low, you're creating that exhaustion. So really nice, guys. Also your RSI bullish control zone, getting ready to come up and test that 70 level. Guys, this is a lot of strength right here. They have earnings. Looks like they just beat on earnings really nicely a couple of days back, and they won't have earnings for a couple of months. I mean, guys, this is a swing trade all day long because you don't have that earnings FUD that you have to worry about, or, a scare of them missing on earnings. All you have is price action. I like MP Materials overall just because the company and what they're doing with being one of the biggest mine on the Western Hemisphere. So love the asset, guys. I think you if you don't already own it, you wait, you get that breakout, you get that back test confirmation, and you jump in with right position size. And the other thing about this structure is it's easy to plot your stop loss, guys. You plot your stop loss below the line, below the top of the structure. You can set it right below one of these previous highs, and you've got a nice little setup. So love it, guys. Definitely check this one out. You also had that triple bullish divergence right here, and that's kind of what I was saying, guys. You get that bullish divergence going in to the the bottom of the structure, and then you get that hidden bullish divergence coming out of the structure. So textbook. Okay, last one, guys. This is beautiful. Like, this is a good looking asset right here. This is RIOT, RIOT for the ticker. This is a Bitcoin mining stock. We've talked a lot about Mara. We haven't talked a lot about RIOT on this channel, and I do plan on making a full video where I go much further in depth on the overall, fundamentals of the company. But as of today, we're just looking at the technicals. Guys, you had a beautiful textbook bullish Gartley with the PCZ that just happened to be at a critical inflection point historically. If you take a look back, you had clear back here, March of 2014, July 2014, March 2013, January 2013, as far back as, October of 2013, and then held it as support right back here in June of 2012. So you guys can see, I mean, anytime it was able to break that level, boom, straight to these highs right here, these candle high closes from back here in December 17th. But what's so nice about this structure, guys, is again, you have the bullish Gartley that tested the PCZ not only once, but twice. And when you got that second low, you also got that higher low. So, and then, you're also in a long-term uptrend. But guys, look at the confluence of these moving averages right here. I mean, when you get that confluence and you get all of those moving averages coming together and the asset starts to break above them, you get a little bit of consolidation right there. That is everything you want to see, in a technical setup like that. You always want to make sure your moving averages are pointing upwards and you're above them if you're going for a long. There is times that you have exceptions, especially on different time frames, but for the most part, you want to see your moving averages 200 on the bottom, 50 right above it, and then 20 above that. If you use the 20, I don't typically use the 20, I just have it on here. But yeah, that's beautiful, guys. Again, you get that first low, you get that second low, you had triple MACD bullish divergence going into the PCZ, pattern completion zone. Perfect, guys. Everything you want to see. You had a really nice harmonic, and on these harmonics, guys, you can, really use price targets either way. You can use it with just pulling your Fibonacci retracements and then, taking profit at your 382 and then your 50% and your 618. Or you can use your C point, your B point, C point, and A point. You're already above and exceeded your B point. But guys, I think once you break this $38 range, you're going straight to 68. There's not much resistance in between that. And with how good Bitcoin is looking right now and how strong crypto is looking, you absolutely could see this thing run to 68 quick and in a hurry, especially if Bitcoin continues to do what it's doing. Now, if Bitcoin happens to just take a dump and go poo-poo on us, then yeah, you're probably not going to see it, but it doesn't look that way. Bitcoin is looking very strong right now. So guys, this is one that I am absolutely looking to take a swing trade on for the short term. I don't really hold these crypto miners for the long term. I more so just kind of swing trade them or position trade them over the course of, a few weeks, even a few months in some instances. Again, very easy to plot your stop loss on this, guys. You just plot it below the gap right at the top of those highs right there from, July. So easy structure, really nice textbook setup. I really like the type 1 reaction. You get that, type 1 return. Now you're getting that type 2 reaction that could take you to much higher levels, if everything continues to go as planned. So that's it for today, guys. Thank you so much for your support. These are the 3 best growth stocks that you can buy right now. I think RIOT has probably the most upside out of all 3 of those, in consideration with how Bitcoin is doing and how massive the moves can be in these crypto miner stocks. I mean, if you guys are familiar with Bit Digital, that's one I called out, sent out to the Patreon members around $5, and it's like gone up 300-400% in the last couple of weeks. Just insane. So RIOT can make moves, guys, so keep an eye on it. I would say MP Materials is probably one of the safer trades. I don't want to say that, but one of the lower risk trades just because it's such a strong asset. And then Sofi, obviously, holding it for the long term is not a bad place to go. So again, this video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. I'll see you in the next one. Love you all. Peace.